I think the market is seeing light at the end of the tunnel in terms of when you look at numbers of infections and deaths, and everyone has been talking about flattening of the curve sort of mid-March, and that's what we're seeing now in some European countries. So essentially, what the market is doing is trying to discount the good news, and I think the market might be ahead, 6 to 12 months, looking at the recovery already.
Let me get you to make a judgment on that, because as you will have seen, there are unemployment numbers that are incredible at this point, and the anticipation is that we might see anywhere between 5.5 to 6 million on the claims number today, on top of the 10 million that we've already seen pretty much. In that environment, and with Refinitiv now talking about a hit to earnings for every quarter for the rest of 2020, is this buying on hope rather than on reality?
That's a very good question. I think a mix of both, to be honest with you, because obviously what we do know is this is very different than 2008, and this is probably something in between 2008 for global financial crisis and a 1930s depression. But what we don't know is how quick the recovery will be, or how quick the market and the companies will be able to get back to normal business, so business as usual. And what we definitely don't expect is everything to be back to normal this year. But again, market is in a long to medium term discounting mechanism, and I think that's why we see these big up moves on the days where we can see some improvement in the numbers of infections. Make no mistake, I don't think we're going to see a huge rally, a strong rally this year, or we're not going to get back to the 2019 levels for another 2 or 3 years. I think I've seen a report last year saying that what we'll be looking at is sort of 2023, 2024. If you look at the potential earnings growth after the recovery to get to the same levels we were in 2019. But again, there's a lot of cash on the sidelines, and people who missed out on the rally, over the last 4 or 5 years are probably trigger happy, and that's why we see these big up moves on the days when the good news is coming out.
Artur, we're starting to get a lot of earnings that gives us a sense of how companies were doing before COVID-19 hit, and some of them were in good shape. And SAP was one of those companies, for instance, reporting this morning. Now, they have mentioned that a lot of business activity, new business, has been postponed. So you start to think about the third and fourth quarter when business activity picks up. But now what we're talking about, many customers, many clients, businesses that have been hit across the board in terms of cash flow, it's hard to see them just pivoting back towards the old strategies and executing on a business transformation, buying more cloud services, for instance, and taking up different software licenses. How do you see that part of the world being impacted over the medium term, because companies have simply just been challenged across the board?
Absolutely. I mean, that's especially true for sort of mid-sized businesses, because I don't want to use the word sad, but the truth is that large technology giants, the SAPs of this world, they will be fine in the long term, and actually they probably see the COVID-19 situation as an opportunity to gain market share or make some pretty good acquisitions. Well, obviously, what I'm not saying is that it's going to be fine end of this year or 2021. What I'm saying is, this is something that we know where the risk is, and as soon as the risk is identified and the world starts moving on, the market will be very, very quickly discounting these events. And again, market is forward-looking, so we, just like in 2008, 2009, the world will still be in a recession, and we could potentially see markets rallying in the US and Europe. But again, my point here, looking at the certain segments of the global economy, certain sectors, there will be big winners out of that, and I think it will mainly be big technology companies with a lot of cash.
Right, Artur, I want to ask you about whether US and Europe will both be rallying together, because there have been periods of time over the past decade where Europe has simply lagged behind and many investors have wanted to be invested primarily just in the United States. If it comes to the stimulus package, you've been pointing out that fiscal stimulus is incredibly important here. What we've had in Europe has been a fighting at the Eurogroup level about the terms and conditions for accessing the bailout fund, with the Dutch wanting more strenuous conditions on anyone accessing that pool of money. Does that mean we might be back in the same old situation where the United States outperforms European stocks because the stimulus has been much greater in the US?
Absolutely. I think that this is absolutely right. I mean, this is yet again in a situation where Europe cannot agree a sort of simple solution fast enough to match the United States quickness in terms of response. And obviously what we can see from ECB is, ECB learned its lessons from 2011 and they've acted very, very quickly. And I think it's quite embarrassing for Europe, for Eurozone, especially that they're still having these arguments, which are extremely sort of sophisticated based on events from 6 or 7 years ago, where the mechanisms like ESM were designed to not only to help certain countries to bail them out, but obviously to introduce a certain amount of discipline, fiscal discipline, which doesn't matter now because this is a natural disaster, and they need to get funding to small businesses and households as soon as possible. So they probably they need to wake up. And I do agree with you. That might be a very, very good assumption here, that US will be. It was, you can say, US was last in terms of contagion and infections. The market probably will be first in terms of running and out of this crisis.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.